that it manages with future standard. That's as performance continues to deteriorate. That's a Bloomberg Business Flash. Paul and Tom.
Alexis, thanks so much. We're not going to cram a 3-hour conversation into 8 minutes. Lawrence McDonald joins us. It's the Bear Traps Report. He's hugely followed. He had a book out that sold more than 10 copies a couple years ago. He had my essay of the year 3 years ago on the wall of money out there. Do you have in your head a point where the yield breaks? Is it a 4.XX 10-year or with 30-year bond? How far out over 5% before we get before we get Lehman-like challenges?
Right. Well, you know, Nancy and Leslie, our last two guests, I mean, if you listen to them and if they're remotely correct, the probability we have 8-9% inflation in the third, fourth quarter is very high, I think, in my view. And if you look at Bessent, the Bessent team and the Warsh team, I've never seen this in my career working together as closely as they are. And I think they know something. They forced the banks, Tom, to buy about almost $1 trillion of treasuries through financial repression. In other words, I think what you're saying is, yeah, they're worried about rates going higher. They're forcing the banks to buy. JP Morgan took their reserves down, Tom, from right. $260 billion to $30 billion.
But the bottom line is, as Nance just mentioned, however we're doing it, we're goosing the economy to a permanent nominal GDP
right.
of 5-6%. I read McDonald 101, Paul. It ends bad. I mean, you just can't goose a Banana Republic level and have things not happen.
We don't want to see inflation that high in the third and fourth quarter. What's going to get us there? How do we avoid it? Let's frame that out.
The rhinos convinced Trump to kick a hornet's nest. As Leslie was alluding to, they misjudged the second, third, fourth order effects, right? Of like inflation distillates, all the...
Are you talking about Iran?
Yeah, Iran. Everything that goes through the straits. Like, we're going to see massive distillate, whether it be jet fuel. You can look at India today. Moody's comments stressing that the people must conserve and not consume. So the whole developed world and the emerging market world is really feels this incoming inflation. And now in the United States, we're kind of like whistling by the graveyard. By the way, Tom, 1 million copies sold of our 2 books right now.
There you go. So what's the response here? I mean, the Fed can't do anything about this, can they?
Well, that's the thing. This is the point of our book, How to Listen When Markets Speak, is financial repression. So when you have a $39 trillion debt hole, the only way out is default or force interest rates below the rate of inflation, right? And the way you do that is, so here's what's going to happen. And this is what I'm hearing. We had a dinner last week at the Dorchester in London. And I'm hearing this from the most sophisticated clients in the world were at our dinner in the last couple of weeks. And they're going to, so what Warsh is going to do, he's going to lower the balance sheet, but cut rates at the same time. But so it looks like it looks like QT in the sense of, he's reducing the balance sheet, but he's forcing the banks to own more treasuries.
The theory is ancient, is we're going to inflate our way out of this horrific debt. By the way, the Dorchester, Rachel from West Lafayette emails in and says they have umbrellas. They have umbrellas in the drink.
Oh, okay. Very good. And that's probably not on our list.
Trust me, that's all she remembers of the Dorchester as well. Larry, I look at this, and there's a lot of people that can articulate it like you. There's people that disagree with you, that read you religiously just to get the perspective. But the bottom line is we're going to inflate our way out of this. What does that mean for people with equities just within their 401ks?
Okay, so think about household wealth. In 1980, when we went through this regime of higher rates, global conflicts, household wealth, 3.5% of household wealth was in essentially hard assets, gold, silver, materials, oil and gas. Now we're down to like 1.25%. So what people need to do is they need to lower their exposure to financial assets, which are bonds and stocks, and tech stocks, and own companies, desperately own companies that control assets. If you do that, you're going to be in a much better shape. And you know what, Tom, what really annoys me most of all about 401ks? Everyone has a 401k listening to us. The S&P is 50% tech now, and now we're going to jam three more IPOs that are going to be AI. This is madness. I mean, this is billionaires dumping ground into the S&P 500 of they're trying to profit on all this AI companies, whether it be SpaceX, OpenAI, Anthropic. They're dumping it into the arms of passive investors. That's wrong.
Well, they got to sell to somebody, but somebody's got to buy it.
Right.
And, do you think the system is sophisticated enough to look at Elon Musk in a rational way, or is it just buy Elon?
Well, what these guys are doing is normally when Jack Bogle created the S&P, there was like a 1-year period, right? So if you're coming public with an IPO, you couldn't just dump it into the passive fund.
Fair.
So the funds have to buy, right? It's a passive fund. They have to buy these incoming IPOs. So the market's going to be essentially one big AI bet.
Okay, in the time we got left, your essay of a number of years ago was shockingly prescient about the sheer wall of money that's out there. It's still out there, isn't it?
It
or
is.
Even greater.
It is, and that's the thing about Besant. Besant and Warsh know that there's this problem in the bond market globally. We've got fewer buyers, and they're just literally putting as much liquidity in as possible. But that's going to just, as Nancy alluded to, that plus all the AI capex assures us of much higher inflation.
So if it's much higher inflation, are stocks the only place to hide?
I think stocks that control assets, absolutely.
And what's an example of that?
Anything like Barrick Gold, Newmont, but also look at BHP, look at Rio Tinto. Companies, look at Alcoa. These are companies that are really the foundation for the power grid, for artificial intelligence infrastructure. These are in our core portfolio, the bear trap support.
Is Microsoft in your core portfolio?
No, it's not.
See, we've spoken for 5 minutes. I don't know if you're wildly bullish or wildly bearish. Am I buying them or am I selling them?
I'm wildly bullish hard asset companies the next 5 years. But near term, yeah, as Tom's alluding to, we're going to have like an inflation shock in the second, third quarter. Trump kicked the hornet's nest.
Right.
We're going to have a big drawdown when that inflation really picks up because the Fed's going to be forced to basically talk a little bit more hawkish.
Larry, thank you so much. Larry McDonald.
Thank you, guys.
The founder of the Bear Traps Report. Look for him at the Federal Reserve, soon to be a governor of the Fed. With our news in New York City, here's Michael Barr.
Thank you very much. The U.S. and Iran remain far apart on a framework to end their war and reopen the Strait of Hormuz. We get